Good morning, traders. Manny Cabrera from MDC Trading Academy with today's pre-market forecast for April Fool's Days, April the 1st, 2019. Let's look at our news reports for this week. We have a week that's loaded with a lot of economic reports this week, beginning this morning at 8:30 with the core retails. Eventually, we go and retail sales altogether, really important number. Then we go to the ISM manufacturing and 10 p.m. PMI. We have no news on Thursday, but the rest of the week is loaded with news. Some before our bell rings, some after. For example, here on Wednesday, we have our ISM non-manufacturing. But on Friday, every single report happens before 8:30. But here's the key, guys. Every one of these reports on Friday is very important because it's about hourly earnings, it's about non-farm employment, and the unemployment rate in general, which is a key indicator of our economy. So keep your eyes open for the effect of this news on our market. Now, let's go quickly to our analysis chart. We start with our daily chart. Market bounces off our 80, our 20 SMA. We are getting close to our reversal of our Death Star here between the 50 and the 50 SMA. 200 SMA, that is a good sign for the market. Market bouncing off the 20 as it held there and it kind of consolidated. Shows a little bit of strength. We've had 3 sessions closing up. Good volume. Our average volume is 1.27. On Friday, there was no exception. We had 1.2. I'm sorry, I meant 1.2. We had a little lower one on Thursday, but it's still 1.911 million. And on Thursday, it's 1.2 million, and on Wednesday, it was 1.4 million. So we've had quite a bit of volume. Our range is wonderful at 28. We're getting some really good movement now that we're running to the upside. Just remember, we have our next resistance area, which was the high of that we set here a couple of weeks ago at 28.66. This is the one that we bounced off at. Obviously, we are at 28.57, a couple of points behind it. That would be a very critical test in the market. Can we break this area? Now, remember, I told you since the beginning, where it's not going to be. If and when we reach all-time highs, it's not going to be a straight shot. It's going to be this type of movement, this type of run retracement. Now, I know you understand the market's run in that particular fashion, but look how deliberate these runs and retracements have been. Everything has been a flag. Everything's been a flag. Everything's been a flag. Flag breaks, flag breaks, flag breaks. That's the way it's been running. That's the way we expect it to run. Probably once we start nearing these areas here, we might have a couple of accelerations up or down, but that's typical movement once we're approaching all-time highs. Let's look quickly here at our projection chart. Again, we have had this rectangle here for quite some time. Here's the market bouncing off the bottom of it. This happened way back when. Here's coming near the top sometime last week. It found support here at this level that we have projected. It bounces off that level again, gets near it again, then it starts a nice trend to the upside, and now we're approaching once again this area here. Once again, another critical area here. Again, that's around the 28.63 area. I think this 62. It's about 30-point range that we had developed there. So obviously what happens here is very critical. Let's look at our analysis chart here. We're seeing that the market obviously, yes, is between yesterday on Friday. This is the range from Friday. Found the top early in the morning, came back in towards the later part of the morning, bounced off it, oscillated to the upside, and created this beautiful trend to the upside, which pretty much it held much of the day, much of the afternoon, until finally towards the end of the day, just around 2 hours, a couple hours after lunch, about 2 o'clock, it broke the intraday high. Actually, this is the intraday high. I apologize. That's the intraday, established a new intraday high, matched it again. It bounced off it. Eventually, in the pre-market, just ran off, including the fact that we have a gap. We have a gap right here, which is very interesting because we're expecting the market to continue higher. But at the same time, if the market wants to retrace, it can retrace, believe it or not, folks, all the way down to here. And the reason that that's a potential is simply because this area here, this gap, is like a huge magnet and a drag on the market. But right now, if we look at our trade chart, we can clearly see the market ran up. Here's your gap, ran through our area, and it's right now consolidating between a support and resistance area. Remember, here's your run. It's conception. This is here's your top, here's your bottom, and right now we find ourselves in the middle of this. Now the market can obviously move sideways, right? Or it can come retest this area and ultimately break, or it can come back here and retest this area down here, or the pressure could be so high to the downside because of the gap that it can come down here and try to fill that gap. So just play it by ear. Remember, if you're going to make a mistake today, as long as we're above this line here, this support line here, let's look for longs. Okay, have a great trading session. Let me know what you think.